Okay, so let's have a look at the last adjustment 9 for Leahy 2023 sole trader higher level question. So we have to make provisions for the following: invested income due and mortgage interest due. So I have them included as part of my patents working, which is working 5, and also as part of my suspense working for mortgage interest due, which is adjustment 4. Then your next is provision to be made for bad debts to be adjusted to 6% of debtors. So we need to find out how much our new provision is going to be. Now remember, we've updated our debtors in the previous adjustment for this €200 or €200 that the debtor or that the previously person had written off as part of a debt that they owe. Now they're going to pay it in 2 months. So our debtor figure is 67,900, not the figure that is in the trial balance. So we're going to take the 67,900. We're going to multiply it by the adjusted figure of 6%. So our new provisions is going to be 67,900. Multiply that by 6%. So our new provisions is 4,740. So that's my new provision. So that's going to go into my balance sheet as a current asset. It's going to be taken away from my debtors figure. Now I have to find out if this new provision is an increase or decrease. I'm going to go and have a look at my trial balance and see if we've got anything for bad debt provision or provision for bad debts. I've got my bad debt provision here. Remember, it's the bad debt provision that we're looking for, not the bad debt figure. So the bad debt provision in this is 2,100. So that's my old figure. My new figure is 4,740. So this is an increase. So it's an increase. So it's less money that we're going to receive. So that's going to go into your profit and loss as an expense. And it's going to go into selling and distribution. Okay, so we're kind of making a provision that people are not going to pay us back. So 6% of our debt we're not going to get back. So we're going to have to foot that bill. And it's going to be 1,974 is how much that expense is going to be to the company. So it's going to go into your profit and loss account. And then there's 4,740. That's how much we're going to reduce our debtors figure by in our balance sheet. Then the next provision that we need to have is equipment to be depreciated 10% of cost per annum. So we go and have a look for our equipment. So equipment cost is 153,500. We're multiplying that by, I think it's at 10%. So multiply it at 10%. So going to give us 15,335, and that's going to be the figure that's going to my expenses in my profit and loss, and it's going to go into admin. Have a look and see what goes. Do we have accumulated depreciation for equipment? And we don't, so it's also going to be the figure that goes into my balance sheet as a tangible asset from accumulated depreciation. If there was accumulated depreciation for equipment there, we'll be adding this figure onto it, and that would be the new figure that goes into your balance sheet as a tangible asset. So that should be working 20. So that's all my workings done for Leahy. Now I can start doing my trade and profit and loss account and my balance sheet.